Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about Sofi Technologies SOFI stock and why the CEO continuously buys in to this stock week after week. So we're going to be going over if this company is a good long-term buying opportunity, why are so many insiders buying up this company, and is this a good long-term investment, and we will be going over the latest price predictions for this particular company. Then we're going to move on and talk about the latest news updates for Palantir Technologies to see how Palantir Technologies stacks up against other companies within their particular sector. And of course, we're also going to be talking about the latest news updates and price predictions according to analysts for Palantir Technologies PLTR stock. After that, we're going to see what Benzinga actually has to say about Palantir Technologies to see if they can give us any major news updates. And then lastly, we're actually going to go into talking about Nio Stock and how two prominent analysts actually come to the same conclusion that investors should be buying a Nio stock right now, especially if you plan to hold it until 2024. And like we do with almost every stock, we are also going to be going over the stock price forecasts for the NIO stock. So for more videos like this one, remember to go and smash that like button right now, comment your thoughts down below, subscribe if you are new, and without further ado, let's jump right into today's stories. So Sofi Technologies, ticker symbol SOFI, is a fintech company or a financial technology company that offers their customers an all-in-one inclusive digital app that gives them anything they could probably need in terms of financial services and or financial products. And the reason why Sofi is still in the news today is that their CEO is extremely bullish and positive on this company. So much so that he not only talks up this company, but he continuously puts his money where his mouth is and he keeps buying Sofi stock. So literally this month, in the last 15 days, the CEO has purchased Sofi shares on 5 separate occasions, and year to date he has bought into the company more than 16 times, which is absolutely insane. And remember, during this time period, the SOFI stock price has actually been trending downward due to macroeconomic factors as well as internal volatility within the company because they are potentially considering a reverse stock split. Because recently the company came out with a proxy statement that disclosed to their shareholders that their shareholders are going to be able to vote in the next meeting on July 12th whether or not to give the authority to their board of directors to initiate a stock split within the next 12 months. So even if shareholders agree and they do give the board of directors authority to perform a stock split, it doesn't necessarily follow that a reverse stock split will happen, even though I think that's exactly what management is going to do. If the management gets the okay from their shareholders and the shareholders give management the authority to actually initiate a reverse stock split, I think they are going to do it. And I think this stock split is either going to be a 1-for-5 stock split or a 1-for-10 stock split. Even though, yes, according to the proxy statement, it could be either a 1-for-2 stock split or a 1-for-10 stock split, I think it's going to be closer to the higher end because of how low the SOFI stock price is right now. Right now, the SOFI stock price trades for around $5.94. So if they did a 1-for-10 stock split, that means that the stock price is going to surge up to around $59.40. However, in the next 12 months, analysts actually currently estimate that the company is worth at minimum $7 over the next 12 months, and on the high end, they have a $22 price prediction. However, the majority of analysts agree that the company is worth somewhere around $10 to $11, while the very bearish analysts actually think this company is headed to around $3 per share, so please be aware of that. And of course, this is going to be pre-stock split, because if they do a stock split, clearly those are going to be much higher in stock price because each stock is going to be worth much more. The reason this is somewhat bad news for Sofi Technologies is that a reverse stock split carries with it a very negative connotation, and investors really don't want to see that for the company that they are owning. So this has scared off some investors to actually liquidate and sell their SOFI stock. However, the CEO has continuously bought into the company because he is not scared even in the midst of a reverse stock split. On June 10th, which was very recent, the CEO purchased around 33,455 shares at an average price point of $5.98 per share. He owns around 3.46 million shares of Sofi, and year to date, he has bought over 569,175 shares. And remember, this is despite the company falling continuously in price. So as the stock price continues continues to fall, the CEO continues to buy in. And it's not just the CEO. There are also other insiders that are continuously buying in, and one of them is a director and the other one is the head of operations. So overall, this is actually very bullish news because these directors and insiders understand that this is going to be a long-term buying opportunity, and if they're willing to hold past 2025 or 2024 when they're projected to become profitable, they are betting that the stock price then is going to be much higher than the stock price now, especially because we are in a time of major market volatility. So overall, the CEO is still buying into the company. He is still very bullish and positive on the company, and he says that it's going to perform very well over the long term, which is going to be 5 to 10 years from now. Another reason why many stocks aren't doing so hot right now is because of rising interest rates and high inflation. Investors are also very scared because there is a possibility of a recession, considering that the stock market is flirting with a bear market right now on top of stagflation. And stagflation is basically when the economy is stagnant or falling while inflation is rising. But overall, I would say today is a neutral news update for SoFi Technologies, and we're just going to have to wait until July 12th to determine what shareholders really want from this overall company. Now, I personally think a reverse stock split may go through, and if it does, that is going to negatively impact the overall stock price, even though technically it could act as a catalyst, at least in the short term, but we are going to have to wait and see. But now I want to talk about our next company, which is Palantir Technologies PLTR stock. And Palantir Technologies is a big data and analytics company that serves both commercial clients as well as government enterprises. Currently, the PLTR stock trades for around $8.12 per share, while analysts actually deem the stock at $6 per share on the low end and $16 on the high end. The average analyst actually thinks that the company is somewhat undervalued because they think the company is worth at least $10.81. However, considering the stock market environment that we are in right now, I actually see Palantir falling even more during the short term, and that's exactly what the author of this article agrees with as well. This author gives the PLTR stock a rating of 39, which means that Palantir Technologies outranks 39% of all of the companies currently listed on the open stock market, and ideally we would want this number above 50, which it's clearly not meeting right now. In other news, when we compare Palantir Technologies to other companies within the technology sector, they get a score of 37, which means that they are ranking above 37% of stocks in that particular technology sector. But again, this is not very bullish news because ideally we would want it to be above 50%. But again, these are only short-term sentiment changes in the company, and of course this could literally change on a dime. I just want to give you all an idea of the current market sentiment surrounding Palantir Technologies and their PLTR stock. I also want to highlight that Benzinga basically says that as the economy is continuously being bombarded with supply chain shortages, inflation, stagflation, rising interest rates, increasing gas prices, and even geopolitical turmoil across the world, we could see even more market volatility, and of course that is going to be especially true for Palantir Technologies. But overall, this is again a long-term play. Now, I personally am much more bullish on SoFi Technologies than I am on Palantir Technologies, but again, they are both good long-term plays if you are willing to hold the company for at least 10 years and you are not willing to overexpose yourself to either of these companies, because again, my personal policy is I don't over-allocate more than 5% of my portfolio to individual growth stocks, particularly Palantir Technologies and SoFi Technologies. So I'm not even at 10% allocated to these individual companies because I understand that these are risky long-term investments, and I really want to see these companies become profitable in 2024 in regards to SoFi Technologies and at the end of 2025 in regards to Palantir Technologies. But the company I really want to talk about today is actually Nio Stock. And if you didn't know, Nio is an electric vehicle company and their ticker symbol is NIO. And this is a Chinese electric vehicle company that currently trades for around $20.11. Analysts currently deem that the company is undervalued right now because the current stock price for Nio is substantially less than the bearish negative analyst price target of $25 for the next 12 months, and the high-end analyst price prediction goes as high as $86 per share, with the average analyst saying that the company is on average worth around $39.70. So why are so many analysts very bullish about Nio, particularly the two analysts that we are going to be talking about today? If you didn't know, Nio reported their Q1 financial results where they actually increased their overall delivery vehicle numbers by 28.5% year over year, and their revenues increased by around 24.2%. However, their losses increased around 295%, which is really not good. So despite an increase in deliveries and an increase in revenue, their losses have absolutely skyrocketed. Now, what put investors somewhat at ease is that on Tuesday, they announced that they will be launching a new product on Wednesday, which is today. And the new product that they launched was their ES7, which is their new mid to large 5-seater SUV, which has Nio Technology 2.0 into it. A Deutsche Bank analyst named Edison Yu currently says that Nio's disappointing earnings last quarter is clearly not ideal, but he goes on to say, and I quote, "Volumes have been under pressure over the past few quarters due to operational bottlenecks and COVID lockdowns. But Nio has fully returned to normal production levels, and now deliveries are on track to increase from 7K a month in May to 25K exiting the year," end quote. So that is a significant increase from just 7,000 vehicles all the way up to around 25,000 vehicles per month. To put that into perspective and context, Nio barely delivered 25,000 vehicles in the last 3 months, but now they are anticipated to not only deliver more vehicles, but also manufacture and have the ability to obtain that amount of vehicles. For the full year of 2022, the current forecast by this analyst says that the company is going to deliver around 160,000 EVs this year, and they're going to deliver twice that amount, going as high as 320,000 units in 2023. So clearly, if you're willing to hold this company for the next 3 years, this company is rapidly growing and rapidly expanding. According to this Deutsche Bank analyst, Nio's ET7 and ET5 electric sedans are actually going to be the most desired vehicles in China regarding the premium market, and they are actually set to be even more popular than Tesla vehicles, and clearly Tesla has seen much success over in China. Now, I do want to balance this with a Morgan Stanley analyst who is also optimistic about Nio Stock. He currently rates Nio Stock as an overweight, which is a buy rating, and he has a price target of around $31 per share. Now, he does go on to warn investors, and he says that Nio is going to experience a very painful quarter 2. So for Nio technically underperforming in quarter 1 and quarter 2, this could anchor down the stock price, but it's going to be a good long-term buying opportunity because this particular analyst thinks that Nio is not only going to be able to ramp up their deliveries and their production to 25,000 vehicles per month, but he actually thinks that they're going to scale to around 30,000 vehicles per month by the end of the year. He also says that with Nio's current electric vehicle portfolio, which would consist of the ES8, the ES6, the EC6, the ET7, and the like, Nio has a bright future even in terms of their overall profitability, which again is way in the future. So despite bad earnings in quarter 1 and a very sad projection for quarter 2, over the long term, this is going to be a fantastic growth play as long as you are willing to hold through the volatility and the risks that come by investing into a very speculative foreign Chinese electric vehicle stock. Now, right now, 14 analysts currently have a strong buy rating for Nio Stock, and this isn't even taking into consideration that the average price target for the next 12 months could be true, or the high-end price prediction for the company. So again, all of these stocks are speculative, risky growth plays. I want you to be aware of this, and I want you to practice proper risk management. But I would love to hear your thoughts down below about Sofi Technologies, Palantir Technologies, and Nio Stock. Remember to go and smash that like button for more videos like this one, and I'll see you in the next YT video.